As far as I can go, rest assured the wind will lead me far from home. Let's sail this world, the water beneath me is so clean, is so neat, is so pristine, splashing over me. Let's sail this world, the water beneath me is so clean, is so neat, is so pristine, splashing over me.
All right. What are the odds the microphone?
As far as I can
Looks like I turned the mic down instead of the music. Good job, me. And the music's gone. Okay.
We're live.
Smooth landing. Smooth landing the plane. What is up, everybody? Welcome to episode number 14?
Could be
14?
15. Could
Have
be
you
14.
responsibly long? I think it's number 14.
Could be.
Questioning it in a high-pitched voice. I'm your host, Steven Cesaro, alongside my illustrious co-host, Mr. Eric Johansson,
What's up, guys?
the esteemed CFA, Eric Johansson. What's up to the people joining us live in the chat? We've got Feach in there, Christopher Scott, Zach Boyd, Marty McFly is here for the 80% APY.
Hope
Marty,
you
I got some
deliver.
bad news. I checked before I came on here. It's ticked down into the 70s, so may have slightly overhyped you, but we'll show you that hack later. Got a great show for you today. As always, I think we are going to start off by asking you to like the stream, subscribe, especially on YouTube if you are not already. This is a visual podcast. Not only do you get to see Eric's beautiful face, but you get to see my beautiful charts if you watch it either on YouTube or on Spotify. But it is live every Thursday, 5 p.m. on the Irresponsibly Long YouTube page. So do check that out. Let's get right into the business tonight. What do I have on the agenda here? Let me pull it up. Yes, earnings. Big earnings week.
Oh my gosh.
This
Huge.
week, last week in Stonkland. We had some winners. We had some losers. I myself was a huge loser of this.
I'm sorry, man.
Took some L's.
I'm sorry,
But
dude.
we'll get into that. Did you have any thoughts or takeaways from what you saw this week?
Yeah, I'm looking at something that just appears very wild to me. Like, this doesn't seem usual at all. Like, even starting from last week when Mag 7 was reporting and like $1 trillion business would go up 20% in after hours. We're seeing that continue. ARM was the big one this morning. That's a chip maker.
Yeah, what is this? This is, oh, wow.
Yeah, so ARM is it's a famous chip maker. It's in every
Holy
smartphone on Earth.
Damn.
It's basically in like every phone, everything that needs a chip.
Up
ARM.
50% from yesterday's close.
Yeah. So this thing, I mean, first of all, it's a good business, but it's like a mature old business that reported 14% revenue growth, and the stock does this. Like, this is what I'm saying, where like I'm not seeing like a market that feels normal. This is also huge. It's a $100 billion company that's up 50% in a day. This is insane.
That's some vol. I mean, it's hearkening to what Kobayashi letter has said on Twitter here this week. Since October 27th, the low, the S&P is now up 900 points, $8.5 trillion in market cap added in just over 3 months.
Wow.
Truly a historic run. We did hit 5K for the first time on the S&P 500. How are you feeling just in general about stocks? I mean, you just said that volatility is kind of weirdly high. I'll take your word for that. I don't pay a ton of attention to the earnings.
Well, it's great. Like the other thing that I'm seeing too is that implied volatility is very low. So like the VIX, which measures implied volatility, meaning like people's expectations, VIX is at 12, and you're seeing this shit going on, which is unusual for me too. Like, but I take a lot of these signs to be bullish. Like ARM is kind of like it's like an AI play, you know, because they have their chip technology in NVIDIA GPUs. So
they're like selling shovels to the guys selling shovels.
Kind of like they just invented the architecture, and they don't create anything. They just license the right to use their IP. So like in an iPhone that sells for $1,000, there might be $200 of ARM-based technology inside the phone, and they only capture like $3 of revenue from their licensing of it. It's like really stodgy business. I can't believe that the stock's doing what it's doing. For that reason, I've been selling this fucking volatility so hard.
Woo! Brave man. So you think we're sort of like mid melt up, just starting melt up over?
Well, I actually want to give you credit, because when we were probably talking like a year ago about NVIDIA, and NVIDIA was like at 350 at the time or something, you were like, you guys, the AI bubble hasn't even begun. And I feel like this is now the AI bubble bubbling, but I feel like these bubbles usually last quite a while before you get some kind of burst. So I'm excited to be long.
Yeah, we were talking about this stupid stock like here, I think.
Oh yeah, NVIDIA.
Like four.
NVIDIA
Low
won't stop
400s, and here we are. We cracked 700 this week. The amount of market cap NVIDIA has added in such a short amount of time is truly astounding. I mean, I think we touched upon this last week, but yeah, up like 70% from the point where we were contemplating whether or not we were in a bubble.
God. So what I'm actually seeing here, and this is like the way I'm actually approaching my portfolio, is like I'm seeing growth themes that are working. AI being one of them. We got the GLP-1s as another growth theme that's just like up only. And I'm thinking that crypto is going to be another one of these growth themes that also participates.
Yeah, that's what I'm hopeful of. I mean, when I look at stocks, there are stocks I want to trade, but like I don't know what I really want to like buy and hold right now. Like everything feels like kind of rich from like a fundamentals perspective, even though I think everything just kind of does melt. And like if you pull up a chart event, I know there's a lot of people calling for tops. I mean that Milton, what's his face guy who kind of called the bottom. He looks like the nerd with the glass.
Wait, I
forgot his
Twitter
Twitter handle.
That's not that guy Hunter or whatever.
No, David Hunter's he's the melt up guy.
Oh,
but Milton, what's his face, just said he exited everything. But I don't know, man. When I look at a Nasdaq chart, I mean that does not look like a toppy chart to me. Looks like a chart that just blasted through all-time highs and has just continuously high momentum to the upside here. So, yeah, I think I'm going to just keep like swing trading the index, because I look at like an NQ chart and it's just like, oh, this go up.
What about like anything in the Mag 7, Meta? Does that entice you at all?
I personally just don't feel like I have as great of a handle on the trading of the stocks versus there's such a cleanness to the futures, and then they have like close to 24/7 volume and have these weird gaps in the chart, and you can kind of look at what happens in kind of the Asia and the London hours to kind of get a feel for what's going to happen in New York. Whereas like, something like Meta, it kind of trades overnight, but that volume doesn't really seem to mean anything.
So let me get this straight. You have no like retirement fund savings account where you're like holding anything sort of for a long
The
period?
only stock I currently own, I own 2 stocks, like the actual stock. I own Coin
Nice.
and I own Palantir.
Not also nice.
And I've owned Palantir for a while, so
Palantir also had a huge jump off of earnings. I'm a holder as well. Love
yeah, I
Palantir.
saw a lot of videos of the CEO going around. He seems like kind of like a Chad.
Yeah, it's really
He's
Chad.
got like nerd Chad, big nerd Chad energy,
Yes.
loser energy, as Alex Trebek would say. So yeah, I mean, stocks go up. Nasdaq going up looks good for crypto. The Meta chart looks insane. I mean, maybe I should buy some Meta. I haven't looked at what Apple's been doing too much lately.
Yeah, I don't
in the wake
own-
of the Vision launch. Not as good of a chart as. I mean, it's kind of like a vertical accumulation kind of thing.
I feel like
going
this
on,
thing is going to
but-
be primed to launch as well.
Yeah, I'm pretty bullish on that stupid thing, or just the entire genre in general. And I guess you could go Facebook. It's interesting because Facebook and Apple, it seems like they took different approaches. Like Apple was like, let's build it like really, really feature rich, right?
Yeah.
So that it's cool, but then you have to wear this giant computer on your face.
Right.
And then Facebook was like, let's make it really, really wearable, but it doesn't really do anything yet. And then Facebook, I guess, is like, or Meta's like, we'll add features, and Apple's like, well, we'll make it smaller.
Right. You got to meet in the middle somewhere for both.
I don't know. It feels to me that Facebook is going to have an easier time just adding features. I don't know how
Yeah. It's,
I don't know how that
it seems like a
vision
much
gets
smaller leap to get mainstream to like wear Ray-Bans.
I just feel like they're different products too. I feel like like the Casey Neistats of the world, like walking around with this thing on their face in Times Square, they're sort of demonstrating, I think, what the Facebook thing will be used for. But I think the Facebook glasses and then the Vision Pro, they're just different use case. There's this sort of like your daily driver thing, and then like power user, like laptop.
Yeah,
You
yeah.
got your laptop, you got your 13-inch little MacBook, and then at home you've got your gaming PC set up with 3 monitors and your massive amounts of RAM. You know, it's different.
I like that mental model. That's, yeah, I could see that.
Because I can see situations where I would want to be wandering out in the wild and like have like kind of a lightweight thing that just kind of blends out, blends in, you know, with my surroundings a little more. And I can also see a scenario where I want to be like immersed and just in a different land.
Dude, I wouldn't wear that Apple one in public. I would save that for my living room and then wear the Meta out.
I saw a really interesting take on there's this account that keeps popping into my feed where this guy gives like fashion takes, but they're like really good. I read the other day, I read this like 30 tweet thread on like what separates like a really nice suit from like a.
Hold on, what's that? Oh, this sounds like alpha.
Oh God, I wish I could remember the handle. I should have bookmarked it. But he's basically just like, yeah, the reason this guy looks weird in public is because it's just like this thing doesn't match like the business casual look. But he's like, you need to wear your Vision Pro in public with stuff like this. And then they show the pictures. Like, I don't know, there's like these like Koreans or something. Obviously, they're just way ahead of us. They're walking around. They look like they're just like out of like Blade Runner or something.
They're just
And
like
they got the
cypherpunk
thing on.
style?
Yeah, and I was like, wow, it does look cool. It actually looks like it works.
Okay.
So, yeah, maybe that trend will continue. But yeah, I don't know. I don't really know if I have a faith in like this one thing to kind of push Apple stock higher over the next 50 weeks. It's just not something I really do, or it's
Yeah.
like a part of my process.
It's not your game.
But I am bullish on that and have been bullish on the idea of the Vision Pro and continue to be so. So I'll keep monitoring that. But yeah, let's kind of pivot, I guess. Let's do the bridge between the TradFi world and crypto, which I like to call the I don't call it. It is the DXY chart. And we talked about this thing briefly last week because it is sort of like my guiding degen light in the fog. Like, is the, if I'm driving my ship and I need the lighthouse, I need the green light or the red light. So I need to, I
And you've
know
been
where to
pretty accurate
navigate.
calling. You've been pretty accurate calling this thing in both directions, like throughout.
Yeah, so
last couple years.
Last week we were, if you recall, we were right here. We had this consolidation, right? And then we had a pretty sharp breakdown. And then I was like, I know that looks bad, but like I feel like the magnet is still the monthly gap, above $1.04 or so. And this week we ended up breaking up and running that gap. And we've had a little bit of a sell-off from it initially. It's kind of like a lower time frame gap. So we made like a 12-hour gap down off that zone.
Okay.
I really want to see one on the daily. Like if I have like a monthly area of interest and I want to see like, oh, is there going to be a reversal off of this area? Like I like to see like a daily move off like a monthly area, and off like a weekly move off like a weekly area. I might be cool with like a 4-hour move, and off like a daily area, I might be cool with like a 1-hour move. Like there has to be some, like you can't look at the 5-minute chart and see a reversal off the monthly and be like, oh, we're
Right.
going down.
Here it
now.
is. Yeah.
Right. So you're kind of balancing a time frame that's close enough to the zone you're looking at as a reversal. But also where it like still gives you signal. Like you can't look at a monthly reversal off a monthly gap, then we're already at like 90 cents and you miss the entire move.
That makes sense.
Kind of a little art there. But yeah, I think we are either like I think in general like we're at a very big crossroads now for crypto, and you'll kind of see this pattern come up not just in this chart but in a lot of the other charts I'm about to throw up there, where I feel like we're at the zone where we're going to reverse. Now it's like a monthly area, so we could reverse tomorrow. We could also reverse like 3 weeks from now, right? Like you kind of have like a big, there's like a big potential spacing when you're talking about what's going to happen in like a monthly zone. So I think it's possible this thing just dies from here and actually we just go up and like we actually already topped on the dollar.
We did wick into that rectangle you drew.
We did get the kind of wick. We did get like the kind of wick up, wick down, and on the 12-hour, you see we kind of ran all these highs, tapped the zone, and then we got a little bit of a see the gap.
Yeah.
This is something that's like is signal for me. I want to see gap up into my area, and then gap down. This is how I shorted coin, by the way. I don't know if you recall that, but like this is the same process of coins. Let me pull up the coin chart just as a refresher. Like coin, I had a similar area. Like we had like basically a monthly zone, weekly zone. It was kind of like a in between those two. But if I pull up like so it's kind of a weekly zone here. So weekly zone. Here's your last up close candle, and you can cover that wick if you want for the whole move. And then if we go to the 4-hour chart, you see on the 4-hour chart, again, weekly zone, 4-hour chart, what happened? We had the move up, gap, rapid move down, gap. And then I was like, oh, this is high probability that this is the reversal coming out of there. So, yeah, so similar setup on the dollar right now, except I want this to be a daily and it's a 12-hour candle. So I think there's a decent chance we go one leg higher on the dollar and then one leg higher down in crypto. But I think crypto is interesting. Like things look strong, things look weak. So I can make a case for a lot happening. I think regardless of whether we go straight down on the dollar or up and then down on the dollar, I think the picture is pretty bullish. So we may be kind of splitting hairs.
Right. You're talking about 1 month versus going forward.
Yeah. Like I think end of this year, right? Like if you're just in the market right now, regardless of whether or not you eat a drawdown over the next few weeks or maybe even a month or two, if it gets really bad.
And that drawdown could be pretty serious though, right? Like in this 1 month time frame, if the dollar just surges higher one last time, then
it's possible, but like I just think especially like Bitcoin is the leader in the space, and I think if you pull up a Bitcoin chart, right, especially like a weekly chart, like everybody I think is aware at this point, we took that key monthly high and kind of sold off hard, wicked right into it. But like we've had 1, 2, 3, 4, 5, 6, 7, 8. Like, there's been like 9 weeks to sort of close below the low of this weekly order block here at 40, 41, 380, and we just haven't done it. And now we're kind of going the other direction. So I don't know. I tweeted about this like after the sell-off where I was like, I don't think that's the sell-off. Like I didn't think we came all that way for like a wick and then we just sort of die. Like that didn't make a lot of sense to me. I thought like at a minimum we're going to run up and fake everybody out and then maybe dump and then maybe go back up. But the more I look at the macro picture, the more I see Bitcoin consolidating here, the more I see like flows, and like we had a really nice week of inflows on the ETF. It just seems less and less and less likely to me that we're going to actually go back down into the 30s if we do break up from here. So yeah, I'm pretty optimistic that we could break up from here and like maybe retest this zone again, but possibly just go from here to all-time highs. And I think you have to be positioned for that if you're sort of in this market for like the long-term upside. I don't think you can be sitting on your hands right now just like assuming that you're going to get to buy in the 30s or the 20s again, because I think there's like a very strong chance that doesn't happen.
Oh, I'm positioned for this, but also my question for you is, what does that even mean for you? Right? Because like everybody's going to be different, like in terms of their risk tolerance or whatever. So being positioned for it, does that in your mind mean you, I don't know, hold like 50% of your net wealth in crypto long right now? Or does it mean you're 2x your net wealth in crypto long right now? Or, because like you also mentioned on another episode that you'd like to maintain a little bit of a cash position at all times.
Yeah, and I went into a little bit of cash in December, like we talked about, and then, initiated some hedges here or there. That cash position is basically gone.
Deployed.
So the cash position has been deployed. I bought a bunch of Solana, actually, in like the low 80s. And then I've been kind of trading some perps as well on top of that on the way back up.
Nice.
Just because I feel like I still didn't quite have enough.
Didn't bite big enough?
Soul. Yeah, but like at the same time, I'm still looking at like the Ethereum chart and being like, this is like a very obvious trade. Like I know we've been kind of second guessing the thesis a bit, as we should. We should always wonder like if we're being idiots, but
well, let's be clear. I'm second guessing with my words, not with my allocations.
Yeah, yeah, and like I have moved some allocation over, but I'm still very ETH heavy, and I just still think ETH is just like an incredibly obvious trade at this point. I mean, this is kind of what you want to see for a reversal on the ETH BTC chart. We've looked at this chart a bunch, and like we know that we've talked about like this is probably where the reversal happens. If it does, this sort of weekly order block that gave us that big pump early in the year. We want to see like more demand from that area. Like if we don't get that, it's gonna be a little concerning. But all of this looks fine to me right now. And then stuff has just been running up, and especially in the realm of restaking, because that's there's just two big things we've got on the agenda now in front of us. Well, I guess there's three. We've got Dekun update, which is coming out, I think, in a few weeks now. I think they announced it. We've got the ETH ETF, and then we've got restaking, which is just eigenlayer basically. And they were sort of running back, all the LSTs, but now we have liquid restaking tokens, and we've got like all of DeFi right now is basically playing these farming games with these liquid restaking tokens. So I'm still looking at this picture here, like, and when I pull up like an ETH chart, like the ETH weekly chart just looks so good. It's just so steady. It's just a beautiful thing. It feels very sustainable. We're just chilling right above like a level that we broke out of. I'm still expecting like 3,600. Like it's got to happen. I'm gonna be coping so hard if it doesn't happen.
Okay, so imagine 3,600 ETH comes within the next 6 months, let's say. Do you de-risk there, or is that like game way on and you're piling in?
I don't necessarily de-risk purely on the basis of a level, but I will like watch a level to see what happens there.
It's always looking at what the chart's giving, not what like price level is.
Like there's a difference between like a liquidity sweep and a liquidity run. So like a sweep, you'll take like a level, you'll kind of wick up above it, maybe even consolidate above there for a while, but then kind of come back down. So it'll be like a wick on like a weekly chart, even if it looks like it was like up above on a daily chart. And then you have like a liquidity run where it goes through the level and just kind of keeps going. So it sucks like if you are like again, this is for people who are like really, really active. Like it sucks to just like have a level and you just sell everything at the level limit order, but you were watching it and then the price just goes through that level. And then it's like crypto. You've seen these candles that just gap up and then it just keeps going up, gap. And you're like, oh, well, I never would have sold. Like if I was looking at it, I didn't even have a chance. It didn't even go down. Right. So that's kind of how I'm thinking about this. Like this is like a monthly level to me. So like I'd be watching for, stuff to happen on the daily. Like if we run that level and we get like a strong like sell off on the daily, I trade.
That would be signal for you.
Paying attention to these fair value gaps. I think somebody in the chat was like, "What's a fair value gap?" And that's a fair question. A fair value gap is if you pull up a candlestick chart, it's a 3 candle pattern, right? So we've got one here. So here's a candle. Here's one candle. Here's a second candle. Here's a third candle, right? The gap happens. The fair value gap happens on the second candle. So you see between the low of this candle and the high of this candle, that is a gap. And then you'll see how that gap basically acted as perfect resistance. You actually had like a really beautiful short out of that gap all the way back down from like 3,600 to that. Like, look what a trade that was, huh?
Dude, first of all, it's
just short the gap and you just get like 28 straight down candles.
It's crazy that you just like picked anywhere on this chart to find an example, and that example played out exactly as you describe these fair value gaps to do. It's
like
crazy that it works.
They require context, right? Like a lot of trading is like, what time frame am I on, right? Like you can't just pick a gap and short out of the gap, right? Like you can't be like, oh, there's a 1 hour gap, I'm going to short. Because if there's like a daily gap above it, that's a way stronger magnet for price than whatever's happening on the hourly. And if there's like a big level on the monthly chart, you can't just be blindly looking at stuff on like the 4 hour chart, because the monthly chart is going to be like it dominates, right? So that's why whenever I try to do this analysis with you guys, like I try to at least start. I mean, I'm trying to just stay higher level.
Yeah, you're doing
on
good.
This program to begin with. Like you don't see any 5-minute charts on here. You don't see any 1-minute charts. We try to stay on like the monthly, weekly, maybe the daily. But even when I'm trading on the 5-minute chart, like I'm looking at the monthly, the weekly, the day. Like I'm still starting on the monthly all the time, and then kind of going down. Like it's really important to do that. Anyway, I had been saying that ETH looked a little bit weak to me, and I was sort of concerned, and I've kind of reevaluated this thesis. Like I sort of thought it looked weak, kind of short midterm, but like I've been just very long-term bullish, right? Like even when I said like, oh, I think we might dip into the 19s, which is still a possibility. Like I was still looking to buy there. Yeah. And like, oh, this is sort of like a gift, but like, I'm not so sure that we get it anymore. I actually saw a really good tweet a couple days ago. Here, this is gonna be a fun exercise for you. This is from Jackus on Twitter. It's pretty good. I like his stuff actually. I can kind of tell people who are kind of know what they're doing, and then people who
Versus
are
the charlatans.
just complete shills. And I think his analysis is good. I've noticed that he doesn't shill like random dumb shit. So shout out to this fellow.
So what's he saying here? Because I'm looking at these two images and I don't really see what he's saying.
So this tweet, he says only a few people are able to comprehend this alpha.
Yeah, not me.
And yeah, I'm sure most people are looking at this being like, what the heck's going on here?
These are two red lines. Like, what does that mean?
Well, so for the people who are listening, there's sort of a chart of Ethereum and Bitcoin side by side. You can see the Ethereum chart is sort of making these higher highs. The Bitcoin chart sort of making these lower lows. This is actually this is a concept I actually use when I'm day trading. It's a concept called an SMT. It's like if you're wanting to get long at a particular level, one thing you can do is like compare what two assets. So when I'm day trading futures, for example, I'll look at the Nasdaq and the S&P and even the Dow Jones, right? Those assets are typically they're correlated. Like when one makes a lower low, the other makes a lower low. When one makes a higher high, the other makes a higher high. You sometimes get these interesting moments where there's like an area where you're maybe expecting a reversal and one index makes a lower low and the other one makes a higher low.
I see that a lot. I see that a lot when I'm looking at, like NASDAQ versus S&P futures.
Yeah. And like when you get that happening in an area where you're already maybe expecting, say, like a bullish reversal, it could be like a very powerful signal because it's like an indication that there's actually some money in this particular asset that is like big money to buying up and sort of protecting that low and not letting it go lower. So that's what he's pointing out here on Ethereum and Bitcoin. And you can see that like when Bitcoin had that nuke, like it made a very clear lower low. Ethereum did not. Higher low. And at first, like I was looking at this, like I see lows and I'm like, oh, these are like a big move down. Got all these like equal lows below. That's like probably going to get taken. But I actually wasn't thinking about this because my brain is often not looking at this type of thing on like a daily or a weekly time frame. Although I should be. Like I'm always looking at it on like a 5-minute chart or something.
Is Jackus looking at a high time frame?
Yeah, this is a daily chart.
Okay.
So I think this is actually like, I think his tweet's right. I think this is like actually like a really, really sick observation in a sick kind of chart. So that's like a great signal to me. Now, what is going to kind of confirm this to me? So on Bitcoin, I think the sort of defining feature of the Bitcoin chart right now is that everybody's looking at the enormous gap we got on that sell-off post ETF. Like that was a very big impulsive move. Now everybody and their mother, and this is something I was talking about when we nuked as like a potential reason why we could run to the upside. Like everybody and their mother is going to be shorting this gap to go down. This is like a standard sort of like.
Well, yeah, that's what you just described. Is that these things act as a magnet and then they often act as a reversal the other way.
This is like your ICT 2022 model for anybody who's a trader or familiar with these concepts or smart money concepts, whatever you want to talk about them. A lot of traders out there trade using these ideas, and that's what happened, right? You had run of monthly level, sweep level, impulse move down, retrace into the zone, you short that, right? But I think what I'm looking for is that about 45.6K or so on the Binance chart. This is sort of the top of this gap. Now, we're already closing daily candles like above like the 50% level of that gap, which to me is like an early indicator that like we're not really respecting it. Like when price stops respecting that, it's kind of a sign that we might actually want to be going higher. And the critical thing for me is actually just like if we close a daily above that gap, I think there's a very strong chance we get kind of like a move up higher and then like maybe even a sharp sell-off back into that gap, and then people are like, oh, now it's on.
So it's like,
and then they short this bounce, but actually this becomes this becomes an inverted,
Well,
an inversion fair value gap.
It's ICT concept just the other way.
Yeah. So these gaps, when you flip them, they have like an opposite effect. Like instead of this becoming like resistance, like this could become like an area of support. So if I see that on Bitcoin, and ETH has like a similar setup, like very similar setup on ETH, you have this gap on the daily that we are kind of disrespecting at the moment, although not completely, right? This is a little early to get into the trade. And then like even more clearly here, you have like a, this very clear order block on ETH. This is 2470 level on the Binance chart for people who aren't watching. So if I see a close again, like above 2470 on ETH, maybe another push up, maybe a sharp sell off into the zone, but then this zone holds, people start shorting on the bounce up, and then like now they're liquidated. The people who have stops with this higher liquidated. Now you have all the elements for this thing to, and now you're like, oh wait, this wasn't distribution. This whole area was just reaccumulation. And now in my mind, we're going to 3,600.
Give me that.
So that's what I'm praying for. It is still entirely possible that it gives us. By the way, I figured out the somebody in the chat was like, "Yo, you got to do the reset." I figured it out on the Mac. We got
Alt
it.
R?
It's Command R on the Mac. Or, excuse me, no, it's Option R. So make these charts a little easier on you guys. There's still a possibility we do this, kind of reject, and then give you one of those. This would probably correlate with dollar just making like a really significant push higher and not rejecting here immediately. This is still possible, but I do actually think this is the less likely scenario at the moment. Like I do feel pretty bullish right now for a variety of reasons, and it feels good.
Same, man. You said you own coin in your sort of like long-term portfolio.
Mm-hmm.
What is anything you see on the coin chart?
Yeah, let's pop over to coin. I was tweeting about this yesterday or today, I think yesterday. Again, like really high level on coin. Let's look at a weekly chart. Weekly charts are cool. We've been talking about this for a while. Obviously, everybody knows this zone we shorted out of. But this area here from like 114 down to 70 or so, this is where like we have like a really high time frame area of demand starting, right? This is a bunch of weekly 1, 2, 3, 4, 5. This is basically like 5 or 6 weekly down candles that ultimately gave us like a really, really big move to the upside. So kind of a good area to look to buy in. And you can see we're already getting like a pretty significant reaction. Like we just touched the very top of that zone, and look what happened. Price just boing.
I was
16%.
I set my first like DCA limit order to buy right at the top of that zone,
Mm-hmm.
and I didn't even get a fill in there. It's just like it's gone already.
Yeah. So good sign. I think that's happening for sure. I mean, one issue is that actually I haven't checked this. We got, what's the high of this candle? 137.31, 136. Okay, so this is so we have a weekly gap above us, right? So I think some people are going to be like, oh, it's bouncing. Now we're just going to go straight up. And while that is possible, that is what like Meta did, right? What mostly happens is you retest these gaps, and then often they give you like another break lower first.
Oh man, that could line up with earnings next Thursday, for instance.
Yeah, I need to pay a little more attention to earnings when I'm trading the stonks
because the volatility can fucking rock you.
Yeah, I mean sometimes I'm like, oh, it's so far away, like, but like then it sneaks up on me, and I'm just like, oh wait, oh it was earnings, oh I probably shouldn't have been in that trade at the moment.
Yeah, so just for anybody watching the earnings side, they're reporting next Thursday, and the implied volatility right now suggests a 10% move either up or down. And based on what I've been seeing in the market, I would expect a larger move in either direction. And I don't really have much insight whether I think it's going to go higher or lower. But I did actually look at some of Robinhood's numbers. They report next Tuesday for the quarter, but they release like monthly data on like their trading figures, and I was hoping to glean some insight on like what retail crypto traders are doing by looking at Robinhood's monthly numbers, and it's fucking flat, dude. Over the whole year, there wasn't even like an uptick in like this latest rip higher.
You're saying we're early.
It's still early, or
That's what I love to hear.
like I do think that there's a risk that Coinbase comes out with their earnings on Thursday and we don't see like massive trading volume. We also don't have like the Bitcoin ETF launched in January, so there's not going to be any impact of that. I think they'll have pretty good, like a lot of their revenue right now is based on their USDC yield. I think that's going to be strong. So that's kind of like stable.
But to me, as like a trader, that's kind of a good thing in a way, right? So like when I'm day trading, if there's like say economic news at 8:30, and I know that I actually want to get long, like I have a long bias, but price doesn't go up in a straight line, and often for us to go up, some big boys have to get some fills lower. So a setup you might look for is to basically identify a zone where you want to get long from, like a tasty zone, but price isn't in it yet. Then the news event often will manipulate or push price into that zone, often creating like a very scary move in the opposite direction of where you think it's going to go. And then that is where you kind of zoom in
signal
to the lower time frame and look for something. So for example, if like we know we want to get long, like sub 110, ideally maybe like in the high 90s or something, like we can look for some consolidation here. We can look for earnings to sort of push price down, and then maybe not like there's something happens, right? Like you start seeing price not really going down as much, even though the news is bad, or you see like a sharp move down, but then like a sharp move back up.
Yeah,
a manipulation leg is typically what we refer to it here as. And when you get that leg on the shorter time frame in a higher time frame area where you are biased to wanting to be long, it's a high probability point to get in the market, right? So as like a longer term investor, like you don't have to do this on like the 5-minute chart. Like you could do this on the 4-hour or like the daily chart, given like how big the zone is, but maybe a 4-hour if you want to be like aggressive. So look for price on like bad earnings to go down into the zone, create a almost like little mini capitulation, but then like pop back up, or mini capitulation, consolidate for a little bit, and then like strong move back up, which is basically what we did here on a higher time frame on the chart. Like if you zoom out on the old Coinbase chart here, and I keep getting my drawing tool. There we go. That's sort of what happened here, right? This is basically the pre-FTX period, the long period of consolidation, and then what happens? You go sharp move down, sharp move up.
Yep.
Reconsolidate, reaccumulate, and then boom, we go. So you could just see this. Wow, that literally looks like a penis.
And 2 balls. Nice.
So yeah, we could see this same exact kind of pattern maybe playing out in that area, maybe on bad earnings call or something. Maybe an interesting long signal. And I think a trade I would be looking to take if I can get it in here is to probably like sell puts under here. Like if we get like a nasty spike down and maybe vol spikes, I think I would be selling puts like sub 70.
Okay.
And then I would be using that to fund some calls.
Well, now you're talking my language, sir. For a couple reasons. One, I'm doing it similarly, but I'm also doing what you're saying. So with coin, for instance, the way I start is I start layering in some puts within that rectangle that you drew. So like even earlier. So like at 110, 105, 100, 95, 90. And I actually want to lose those because I want to be assigned. I actually want to like be forced to buy that dip. But then I also have some like real scam puts out there that I've sold at the $60, $50 level. And I don't expect to lose those. But I use like I have a cash balance always that's just sitting there. It's like in money market funds earning 5%. And for me, like I do want to deploy that if I get, $55 coin. So I'm selling those way, way out of the money and earning the premium. The premium is pretty fat. And like you said, if we do dump, then the premium will get even fatter. And I like what you said too, like waiting for the realized vol to come through, that will like pump up implied vol, and then you can like sell into that. That's exactly what I did with ARM. I think like, earlier you joked like, oh man, bold move of you to like sell vol into ARM after that big massive pump. But I feel like that's the point. You do it after the event has occurred. You get historical vol being very high, which like pushes implied vol high, even though the event is already in the rear view. And then you can sell into that very easily with like seemingly less fear, I guess.
I like it. Yeah. And like, if we say we do spike into the 90s, right? Like I am still expecting us to kind of bounce back up later in the year, run, this recent high, but then also run this liquidity above like 207 or something. And then probably ultimately come here above 369. Nice.
Yeah, baby.
All right. So this is, I don't want to say it's like a free trade because it's not, right? But like, if you get a move down to the 90s and you sell, these sort of 60s or 70 puts, that's going to more than pay for like a 200 call. Like you'll probably like make money doing that.
Right.
That'll be actually be like a credit trade. But it's not really free. Like you are exposed to delta, right? Like because basically your puts sort of have like a negative delta, and then so do the calls, right?
Yeah, but the puts will be closer to the money at that point, so the delta
so
would be
if price
higher.
goes down, the value of the calls you bought
Right.
goes down, and then also the value of the puts you sold goes up, which means your balance goes down.
But
right?
I typically I don't like buying long calls on something that I actually really want to own, like way out of the money. Like you're talking about buying a 200 strike call on Coinbase. I would rather buy like a 70 strike call Coinbase and like just using that as like common stock, but you're more capital efficient because you don't have to put up all the money. And the delta, I look for like above 80 delta, so it's almost like owning the shares.
Yeah, and that's what you get if you're deep in the money. But yeah, you give up the capital efficiency, you give up the
Right.
but like that's a trade I take a lot. But I don't know. I think the sweet spot is going to be is probably like a 200 strike, because if price does go to the 369,
oh, you're gonna be
that
printing.
200 is going to be like just print. I mean, obviously depending on the
Yeah.
exercise date.
Yeah, I guess you're saying if price 4x's, we're gonna be rich.
Yeah. The other thing I was considering doing was just selling puts to buy common stock and just forgetting about it.
Yeah, well, or just sell puts like,
because I do want to own this.
I mean, you can sell puts like at the money too, and just like buy common stock, like be assigned that way, and like you're getting paid to buy the shares.
Yeah. I mean, this is something I do a lot, is like, I have spot positions and stuff, but then I still trade it. And it's good because like it keeps me from doing dumb crap with like my spot, because I can, it's long trade, and I have like the stuff I'm going into and out of, and then I'm like paying like hyper attention to like, I'm just always on a coin chart. I'm always on an ETH chart. I'm always on a Bitcoin chart. Versus like sometimes I go too far down the alt or the stock rabbit hole, and I do this all the time. I can put like too many positions on, and then I look at my brokerage account. I'm like, oh shit,
Fuck, I earned that. I mean, I hold that. I forgot. Yeah,
which is it was a rude awakening I got with my Snap earnings announcement on my phone. I was like, oh no.
Oh shit, forgot about that one.
I was like, what are we doing? negative 30%. Oh, well. So yeah, bad trade there. But we've been doing well in the miners today, fortunately.
Mara,
I haven't gotten fully back into mining, but like I'm probably like half in to the position I had. Mara was I'm basically mostly in Mara, and then I have like some Hut, and then a couple other kind of small guys, but like Mara is kind of the biggest position. Mara was up 23%.
I feel like you can just own Mara, actually. Like, I don't think you need to fiddle too much with this shit. They're all the exact same business, and nobody has a competitive advantage. Mara's the one that seems to perform the best, being the biggest. I think like you just can own that one.
Yeah, and I don't know. It looks pretty good to me. I think Bitcoin go up, Mara go up a lot,
Yep.
and I think we're gonna be fine on that trade. Although I am still wondering, like, are the miners like the best thing I could put capital into? I'm still questioning that.
So yesterday, before we recorded Alfalfa, Carne Asada Chris was asking me, he's like, so what do you think actually happens to the miners when the halvening comes and their operating profit or their operating income gets chopped in half because of the halvening? And I told him, I don't give a fuck. I don't think it matters. All that matters is Bitcoin price.
And also that's what's priced in. I feel like it's not like everybody with like 2 brain cells to rub together isn't like aware of the halvening and like the impact it has on miners. It's like,
well, I mean, that's a good point. I hadn't really like even thought about that point. I was just considering the fact that none of these miners have ever reported profit in their entire existence. So I don't think it's going to matter now all of a sudden. Like nobody cares about that. They just make Bitcoin and Bitcoin's going higher.
yes, we sure hope it is. Anyway, let's pivot to I don't know if it's like a trade of the week for me, but sort of like my alpha of the week. So we talked about how restaking is a big thing right now on Ethereum. That's around eigenlayer. A strong word.
Yeah, you get your points up. Points are up.
Points are going up. Points are going up. So base early eigenlayer. You could deposit a liquid staking token in it, like ST
I would
ETH.
put ST ETH and RETH.
Or RETH, right? And you did that, and you got points, right? But then, like we like to do in crypto, we invent all these like crazy derivatives, and then suddenly people are like, "What about liquid restaking tokens?" So now we've had projects come up. EtherFi, I think, is the one I'm most in.
Wait, hold on. Tell me more about this. So you take your points and you use those, or
So much in the same way that pre-merge, like people staked ETH, right? And they were like, oh, I want to still have access. I want to still have like liquidity on this ETH I staked on the Beacon chain here.
Right.
So, Lido came along and created ST ETH or Steth or Steth or whatever you
I call it STE. Yeah.
Steth. Let's call it Steth. Sounds like Steth.
Steve.
Stephen. Stephen. But much in the same way that Lido lets you have like liquid restaked ETH tokenized, what something like EtherFi is doing is you have liquid restaked ETH. So
you just put up your ETH or your staked ETH as collateral, but you get restaked.
So it's ETH that's basically staked in eigenlayer, but now it's liquid and wrapped in a token, and you're basically can like hold this thing and sort of get access to the eigen points by holding it, but also they're going to do an airdrop. I think.
Okay, so EtherFi, is that what you said it was?
Yeah, let me see.
EtherFi, and then like they pay you in
Ether.fi?
like EtherFi tokens, I guess.
So EtherFi is going to have an air. So the EtherFi staked ETH is EETH, I guess, which probably stands for eigen ETH.
Yeah.
So 911 million staked here. That's pretty thick.
Yeah, not bad.
So this is no little tiny operation going on. But basically, like if you hold ETH, you're basically getting access to 2 sort of sets of points, like the EtherFi points, but then also like the eigen points, and each of those things is going to sort of result in presumably an airdrop. People think that the eigen airdrop is going to maybe be the largest airdrop of all time.
Would be nice. I got a lot of points.
Yeah, like they're like again, like the confluence of the macro backdrop, the crypto backdrop, the Ethereum chart, eigenlayer, the ETH ETF, like yes, like Solana is probably going to go up more, but like the yield on ETH, the free money from the airdrop, the limited downside, just like how good this trade, like just sitting in massive amounts of ETH and farming, like max farming eigenlayer, it's just such an obvious. I mean, it has been an obvious trade for a while. Continues to sort of just be like a really good thing to do.
Okay, hang on. Like, I want to go back to EtherFi. So if I want to participate in EtherFi, liquid restaking, do I buy ETH and then go to ether.fi and click stake now?
Okay,
stake
so
my
I'm not
ETH?
even doing this. Unsurprisingly to you, I'm
You're
going to
like-
take you down the degen rabbit
You're
hole.
3
right?
dreams deeper.
So yes, you could just stake ETH and eigen and get eigen points. And yes, you could just put ETH into EtherFi, get EETH and get eigen points and EtherFi loyalty points. But there's a third, more degenerate option, which is to come into our boy Pendle. So you may have noticed that Pendle is on a bit of a run.
It's a coin that won't stop going up.
It's just up only coin, and the reason it's up only coin. God,
Is this
do we have a VPN on this?
VPN gated?
You got to be kidding me! Oh no, I don't have a VPN on my. Oh, I did not see this coming.
Okay.
Yeah, we got to get a VPN on this laptop if we're gonna.
Okay, so without being able to look at Pendle, what I'm guessing is they have like a bunch of different
Okay, so
pools or
yeah, so the main reason I invested in Pendle way back in the day is like we have these DeFi primitives, and they're these like kind of rock solid foundational things that we have in the real world. Like we've got exchanges with Uniswap, we've got like Maker for your cash, you've got like Aave for the borrowing and lending. There is a very, very like important element of like TradFi, which is like stuff like the interest rate swaps.
yeah.
Like this marketplace is enormous. These types of derivatives, we didn't have it in Ethereum. So Pendle came, and they're basically like, oh, you could basically trade, interest rate swaps on first just the ETH staking yield, but then it turned out you could do this in a bunch of different areas. And now like Pendle is just like absorbing a ton of TVL because people are kind of using it as this vehicle to sort of trade the restaking narrative. And like I think last I checked, the TVL was like approaching like $1 billion in here. So
In Pendle.
yeah, but
When you told me about this, I kind of poo-pooed it because I didn't understand
it's
why.
it's so complicated. Honestly, like I'm questioning whether I should even explain it right now because I feel like, especially without the visual, it's just going to sound like Chinese, and I think people want to just sort of like get to the chase. Like
okay, well maybe we can do it separately or something because yeah, it's gonna be hard to describe. But like,
well, I've sort of found a workaround, I guess, to showing this. So
okay, that's cool.
there's not just 3 layers to the degeneracy. There's an optional 4th layer to
Okay.
the degeneracy, which is what I'm in right now, which is a project called PenPy. Do you remember Curve and Convex?
Sure do.
Do you remember how Convex basically like so Curve is kind of annoying because you have to like lock up Curve to boost your rewards. It's this like, and you have to have a bunch of Curve and you keep locking it, and it's like kind of confusing. And so Convex came along, was basically like, oh, you just stake all your Curve liquidity through us. We have our own Curve, which we will use to sort of max boost everybody's things. And everybody went through Convex. And at one point, people were like, hey, there's like billions of dollars in this Convex protocol, and it's trading at like this tiny fraction of the value of Curve. And then the market one day like snapped, and then Convex went up like a huge multiple, and then everything died as it did in DeFi. But PenPy is to Pendle what Convex was to Curve.
Okay.
So Pendle has a similar mechanism where you can get these super juiced yields on like staked ETH, right? Like you could earn at one point, like I was earning, 17, 18, 19, 20% on staked ETH in Pendle. But in order to do that, you have to own Pendle, lock it. And I hate locking tokens.
And you're getting paid in Pendle, I presume.
Yeah, you get Pendle rewards, you get trading fee rewards. There's a bunch of stuff that happens there, right? So PenPy, you can basically run anything you're doing on Pendle through PenPy. PenPy has a bunch of Pendle, and then it basically gets you like a max boost. The downside of this, obviously, is that you are layering on so much smart contract risk on top of already a lot of smart contract risk.
So 4 layers.
Yeah. So the pool in question here is the EtherFi ETH pool, right? So,
And this is all on layer 2. or no? You just pulled up Arbitrum.
Yeah, so Arbitrum is actually where the yields are highest. Pendle is on ETH. It's also on Arbitrum. I'm not sure if it's on any other chains. It's on Optimism as well, and
Cool.
apparently BNB. The TLDR of Pendle is that it allows people to trade, interest rate swaps in a particular way. In order to do that, there has to be like liquidity. So you can be a liquidity provider on Pendle. You basically can put your ETH into Pendle as a liquidity provider, and then Pendle then gives you trading fees. They give you Pendle rewards on top, and then you're still collecting the EtherFi points. You're still collecting the Eigen points by doing this, right?
Wow.
Right. And the TLDR of all this is that if you go on the just base Pendle and do the ETH pool right now, you're making 60% APY with all of those things sort of kind of.
I guess you probably have to presume
Vinaigrette.
some kind of Eigen return with
Yes.
that.
If you do this on PenPy, well, before this pod, we were at 80%, which is when I clickbaited everybody. It looks like we're down to a paltry 72% APY now.
Damn.
But yeah, if you're willing to take on that extra risk, and again, you are taking on PenPy risk, you are taking on Pendle risk, you're taking on EtherFi risk, and then you're taking on Eigen risk, and then there's probably another one in there that I'm forgetting. So this is just like a multi-layer risk sandwich.
That's a lot of layers. But remind me though, like if you wanted to go to layer 3 only, and that would be Pendle, not PenPy.
Yes.
What the yield there is like 17% on your.
No, it's probably about 50 right now.
50?
I would guess.
Holy
So
shit.
it's not that much lower. Right?
Yeah,
It's just like how much of a degen
God damn.
are you?
Pendle is the shit. Okay. Well, this is pretty solid alpha, sir.
I got some questions in the chat. Let me check those out here.
Okay.
Marty, are you using the EtherFi ETH liquidity pool? Post a how-to with screenshots of the. Yeah, I'll. I apologize for not having the visuals for you. If you want to do this, you do have to go to Pendle. Was it Pendle.fi? It's very easy to get into the ETH pool. Like you just have to zap ETH or any other kind of ETH. It's like kind of like a one-click thing. It's pretty simple. You just have to just go to Pendle.fi and just whatever you got, ETH, whatever. Just put my face back on. They got it. Okay, there we go. I want to feel like I'm talking
You're
to the
part
guys.
of it.
So yeah, you're gonna zap into the LP. What you first have to get ETH, then you have to get into the LP, right? And then there's like a staking process after that. And if you're using PenPy, you would take that token from Pendle and then go stake it in PenPy. I know this is like horribly complicated. I just mostly wanted to make you guys aware of this. I'm sorry the solution is not easy to follow.
Yeah,
I will give a shout out. There's a Twitter account you should follow called, I think it's Pendle Intern. So the Pendle Intern has like all sorts of how-to guides on Pendle, which is very important because Pendle is one of the most confusing DeFi primitives that we've created in an already confusing world.
That sounds compelling though. I'm not playing in that yet, but I do like the idea, and I think we'll share that Pendle Intern in the Discord or something. And
Yeah. I will post the guide in the Discord if anybody wants to come check it out. Otherwise, like if you go to the Pendle Intern Twitter, they've got this with visuals. Again, be aware of all the smart contract risk. It is a fat yield. Like it's a pretty fat yield to have on basically ETH. Like really fat. So it is tempting, and I do have a decent chunk in. Please don't put all your money in.
I was gonna ask you that next. Like
If shit happens.
Like, well, it's like your mileage may vary kind of situation, but like I wanted to ask you, not telling that this is like how anybody else should do it, but I want to ask how much of your like long ETH bag that I presume you want to hold for a while, like how much are you putting in to these different layers, particularly like 4 layers deep?
Not a ton, maybe like I might have 5% in this.
Okay.
Which is a pretty good chunk for
Do you
it.
stagger
It might even be 10% actually, which is like that's like above my risk limit.
Do you stagger it at the different layers of depth of smart contract
I
risk?
do. Like, I mostly have it in Pendle because I don't want it all in BentBuy.
Yeah, Pendle
I think
sounds like kind of a Goldilocks zone.
Pendle is definitely safer. It has to be safer than PenBuy because PenBuy is just a thing built on top of Pendle, right? So if Pendle fails, then PenBuy definitely fails, right? But you could have a situation where Pendle's fine, but PenBuy screws you, right? Or you could have a situation where both of those are fine, but then EtherFi screws you. You could also diversify. Like, there's other tokens besides EtherFi as well. What is it? Is it RETH? No, it's not RETH. It's that's Rocket Pool ETH. It's Renzo ETH, Easy ETH. So Renzo is another one. Oh, and there's also Kelp DAO. So you got Renzo, Kelp DAO, and EtherFi. So if you're hardcore, you can diversify amongst all three of those restaking tokens, right? You can kind of be like, okay, I'm not going to put all my ETH in Eigen, although I do have a lot of ETH in Eigen, like, because I just think the opportunity is too big, right? I don't have all of it in there, but I do have like a lot in Eigen, right? But then you don't have to put all of your Eigen into restake tokens. And then the liquid restaking tokens you do put it in, you can split that between these three. And then if you want to juice it more with Pendle, you can take a portion of that, put it in Pendle, and then you can take a portion of that, put it in Pendle. And then you can kind of average out like a nice yield. Or you can just say like, screw it. Like, I'm just gonna YOLO and just
So
put it all in the highest yield thing, but you are taking on a risk.
So the stuff that I've already deposited Eigen, that can't just be reused for like EtherFi, right? Like, I'd have to deposit new shit to EtherFi. Like, I can't just use my Eigen layer deposits, right?
I don't think so. Yeah, I think you're supposed to. I don't know. Maybe I actually haven't tried that out because I've just been going directly through Pendle, like with the Zap function. So I haven't really tried to use the EtherFi app itself. I've just been going just straight into basically like Pendle.
Oh, I didn't know you could do
EtherFi.
that.
Yeah.
So that's the easiest way to do it. So zapping.
Yeah,
in
if
from
you want
Pendle.
to do the Pendle, which is like a lot of additional yield. So, like, I mean that's what I'm doing because
And I wanted to own Pendle anyways. I could just earn it, I guess.
Yeah, I've earned a lot of Pendle. Like, I've been in Pendle for almost a year now, just farming that.
Are you dumping it? Farming and dumping?
I've sold off like a little bit of it. I probably should sell more.
It's up only.
The chart looks a little sketch to me right now. It's like at a point where like, yeah, it could keep going higher, but I don't know. I've seen this movie a lot where you have like a highly inflationary DeFi coin. The inflation attracts tons of TVL. The price goes sort of up only. Everybody's on board, but then like something pops and then it just dumps like 50%.
Well, we all know
this already happened like last year, I think like twice.
With Pendle?
Yes.
Oh.
And it looked like it was over twice, but it just kept it recovered and just went up higher.
Well, I think that's what's funny about it is because we all know how the movie ends. It's just how long does the movie last?
I think Pendle's FDV is like 750 million. I'll call it up on CoinGecko and give you guys an accurate answer. So Pendle, yeah, so 750 fully diluted, only quote unquote 280 million market cap. So in spite of the enormous run it's had, like what's like a comp, like, you know, Aave, you know, is a standardized. So Aave, 1.2 million, 1.3 fully diluted. So Pendle is about half of Aave's fully diluted, and it's like 1/5.
Fuck, it's crazy to me. It's actually crazy to me to think that Aave's only 1.3 billion fully diluted valuation. That's fucking low.
But one of the other reasons that Pendle has been like super like goaty is that it's not just like a restaking play. It's also like an RWA play. Like, I think there's actually like a decent amount of real world asset TVL in Pendle. I think some institutions have actually been using Pendle. So it has a great like set of narratives going for it. It has like a reason to exist. Like, people use it. It does like a useful thing. Like, if you're an expert with Pendle, you can do some really crazy stuff, right? So one of the things Pendle lets you do is it lets you sort of like separate the yield as like its own entity that you can trade. So if you think the yield of, say, like GMX is going to go higher, you can actually trade that on Pendle, and with like a very tiny amount of capital, you can make like mega outsized returns on that versus like you have this like extreme capital efficiency. And what Pendle did with the airdrops here like is like kind of like a new thing. Like they're now letting you do like leveraged points in a way. Like so you can actually like there's a valuation for what the market thinks like eigenpoints and EtherFi points will be. And like there's like a way to use Pendle where you're putting like an ETH in, and at the end of the period, you're not getting an ETH back out. You're only getting points. Like you've stripped the ETH out of it and you're only trading the points.
Crazy.
Right? And then somebody else is like, I don't care about the points. Like you can actually go into Pendle right now, I think, and lock in 30% yield on ETH. With none of that.
Just if you just take no points.
Yeah. Right.
Yeah.
So you take all this certainty, you get like a pretty high yield, but then you've got guys like me, and like, nah, I want the 70%. And then you've got other guys who are like, actually, I just care about the points, right? And you can basically say like, oh, this one ETH I'm putting in is going to get me, say, like 1 million points. And like, if you look at what the market is pricing 1 million points at, like 1 million points might be worth like $8,000, right? So that person is like, oh, well, even though I lose my ETH, I'm basically buying all these leveraged points with it that I think are going to be worth like $8,000. So, well, now that person can put 100 ETH in and get like 800,000 of points. And it's just like a totally different way of playing the air. It's not something really... I'm doing, but it's cool that exists, and it's providing like a certain type of liquidity in the market that didn't exist before.
It's like a new primitive in crypto for sure.
Yeah.
I had one more question about it, which was, is Pendle available on layer 2 or is it only L1? Like I just kind of need to know how much size I need to come in with this thing to make it worthwhile.
On what?
Is it available on L2 Pendle?
I think it trades on Arbitrum. I think
no, I don't mean like Pendle the coin, but I mean like the protocol.
Oh, you should use it on L2. Yeah, I think the yields are actually higher on Arbitrum than they are.
Oh, when you did the drop down, that showed that it was on Optimism.
Yeah, like if you do this, definitely do it on Arbitrum. I'm not sure if it's because they're getting like ARB subsidies on top, but like the yields are definitely like higher on L2. So it's like a win-win. You get because these fees are super nasty on L1, but on L2, it's
I was like, I have to
it's
come
like
in with 100 ETH to like make this make sense.
Yeah, instead of being like $300 of fees to kind of do all this stuff, it might be like $5 or $10.
Cool.
So if you have a big bag, it's not too painful.
Cool, man. Well, thanks for sharing that. That is fucking awesome. I'm getting I'm feeling a tingle somewhere in my body that reminds me of like a 2019-ish time frame. That was a fun time.
Yeah. We are an hour 15 into this. Let me check the chat. See if we've got any requests going on here. Oh, Personal Evolution wants us to talk about PayPal. Oh. We talked about it, man. I took a gunshot to the head. That was a losing trade for me. I am stopped out on PayPal. That was an options trade, and I guess I still have it. But
You want to look at a chart?
Yeah, I mean, I'll pull it up. The chart is kind of like, I don't think the chart's bad actually, but I actually kind of wanted to sell this when the CEO is running around just like telling everybody how sick it was going to be, because the market sort of ran up on the basis of like the CEO hype. He's basically telling everybody that we're going to blow everybody's mind, which is a terrible thing to do. It's a terrible thing to do to like get like the streets like expectations up, because you're never going to meet them, because they actually came in and they actually I think blew earnings out of the water, but the stuff they demoed was not that cool in my opinion. Like I was disappointed.
Yeah, I don't really follow the name, so I don't know what.
It's not a lot of nothing like 0 to 1, right? It was just like, oh, now you can do this cool thing on the checkout page, and it's just like, bro.
So what did it do? It just reported earnings, yeah?
Yeah.
Okay, so that's the gap down.
Yeah, so pretty bad gap down. I mean, it's 10%, which is pretty.
Seems mild in today's world, actually.
Yeah, pretty nasty. I mean, I think if you like believe in the stock, like this is not it's not like a terrible area to be adding, and we certainly could like reverse from here.
It's a lot of a lot of lower highs.
Yeah, it's still a very high time frame bearish chart, although it's like kind of one of those charts where like the selling pressure has sort of clearly diminished, and it's kind of in like a coiled spring phase. And I do think this stock has a lot going for it. I personally, had a risk parameter on the trade. I got stopped out on it. Happens. Lose like almost half my trades. And then I was just like, I think I'd rather buy more coin with like this than kind of like enter back in here. So I personally like reallocated that capital. I did some other stupid shit with it too. Like I didn't even tell you I bought Carvana.
Is that like the most shorted stock on earth? I think
I might actually sell it because I'm just doing some
CVNA.
CVNA. That's right. I'm just doing this so much. Oh yeah, this thing is nice. All right, so we're up bigly on this at least. But yeah, I'm just like should I be trading some of these like trash stonks?
Like you don't have,
don't I have enough like
you don't have
in
to
my
buy
life?
shit stonks. Like you can just buy like Meta and Nvidia
Look,
and not
man,
worry.
I don't disagree with you. I'm a human being. I don't follow my process. I gamble too. I make mistakes for sure. I didn't even want to talk about this one because I didn't really have like a good. I was just like, nah, I think this is gonna go up a lot.
I'm embarrassed. Well, yeah, it's popped. Good job.
So yeah,
The old triple bottom there.
yeah. Personal evolution Zoom. So I still haven't really bought any Zoom, sir.
neither.
Like Zoom is still in the category of like I'm watching it because it looks like it could be pretty interesting because again you've got this gigantic base going
Oh, it looks
on.
like the PayPal chart.
I don't think it looks too much like the PayPal chart. I think this like
What? It looks the exact same.
no, like because like on Zoom you've got like a clear kind of double bottom kind of going on here. You've got like a bit of a market structure shift, it's a little different. It's similar, but it's different. I'm still waiting to see like a gap here. Like I haven't seen a fair value gap on the weekly, which is something I want to see to take a longer term trade. Like you can see all these candles, they're just like there's no strong move here. And it's kind of it's generally a bad sign when you have gaps in the down leg, but there's no gaps in the up leg. We want to see like gaps in the down leg and then gaps in the up leg that kind of overtake
I see that.
the gaps because it's a sign that like the order flow in the market is shifting.
Mm-hmm.
And I don't want to do what I did on PayPal again, which is to, I think I said when I took that trade that it was like a smaller position size and it was like aggressive. Like it was like early and there wasn't like confirmation yet, but I liked the setup on like the monthly and I was like, oh yeah, I could hold this for a bit. But like, I don't want to do that again here. So if we do get like a weekly gap on Zoom at some point, like, yeah, I'll look for an entry on the trade. But until that happens, like this could just run another low and then go up, or it could just pull like a chain link and just go sideways for like a year.
Sure.
Which is also not a great option if you have like capital locked up in it. So not going to trade this one without confirmation. This is still just like a watch thing for me. Robinhood, I kind of made an exception because there was a strong move out of the area, although it didn't break structure. And like I had like a thesis that made sense. It was just a part of another trade I was taking that I sort of already believed about the market. Whereas like Zoom, I don't have a thesis on Zoom. I just think the chart looks like a particularly interesting area. Like if it gives you the long.
I still like Robinhood too, but I was looking into Robinhood today, and it just reminds me like, why own Robinhood when you can own Coinbase? Like it's just so much better.
Yeah, I mean upside.
Yeah, upside. I mean, just the business though. Like Robinhood doesn't even earn trading fees, like no transaction fees. So it's all pay for order flow. And if we assume that volumes come back in a big way, then Robinhood will do fine. We'll do great.
I mean, I still just have the original thing I nibbled like here
Same.
at $10 because
I mean,
I haven't
Yeah.
seen anything to make me want to get in. Like again, like if you pull up a Robinhood chart, we've got weekly gap right there. Looks like we're just testing that and probably going lower. Now, if we this gives us like some sort of trade here. Like if we close above this gap and we start consolidating on top of it, like I might take that as a trade signal.
Okay.
Like at least there I have like a thing like I can set my risk at. Whereas like Zoom, it's like where do I put my stop on that chart?
Right. So Robinhood, interestingly, because I was looking at it, the fundamentals finally, before I was just treating it as like Coinbase is going higher, so Robinhood should too.
Mm-hmm.
I actually looked at it. They earn the majority of their revenue from TradFi options traders. I guess like during COVID, retail traders just turned into like full options degens.
Yeah.
And that's how Robinhood's making their money, is on options. And the options trades are coming through strong. Crypto is like not really a big part of their game. So
Could be.
yeah, could be.
It could be. Yeah, the other thing that bothers me about the hood chart is that, I mean, we were talking about liquidity runs and liquidity sweeps. Like this is a sweep. Run the high, close below. Typically, you get a move at least into the kind of like the 50% of that zone, if not lower.
Mm-hmm.
Not something I really want to be fading. This is kind of like negative order flow on the weekly. I don't want to be going long into that. So kind of still wait and seeing on that. Calcium wants to look at Novo and Eli Lilly again.
Oh yeah.
I don't know why I keep pulling these things up, guys. They just look, they go up.
Just buy them.
Look at that.
Just buy them. So
We just tell you to buy this every week.
like buy
When was the first episode? Yeah, we're up like 50%.
So buy a long dated option that has like a delta of 80 0.8 or higher. You're going to get capital efficiency on that, and these things are up only. So it's at NVO. So NVO and Lilly reported their earnings within the last week or 2 weeks, and I was on the Novo one, and their revenue's up 40%. On everything, but here's like the big out for both of these companies because they're the same trade basically. It's the obesity one, because like right now they're treating like Ozempic and stuff is still a diabetes drug. It's like kind of being used as a obesity one, but like they can't even make enough obesity drug to service the demand, and the demand is fucking insatiable. What they said on the Novo call, they said there's almost 1 billion people on Earth that are considered obese, and only 2% of these people are treated with like medicine right now. Only 2% of this massive TAM. So while their total revenue was up 40%, on their obesity drug that was up 150%, and I expect this to continue, potentially accelerate from here. Like, and Lilly's the same story.
Yeah. I mean, this is a good example of like where I'm just like a moron.
Yeah, because
right?
you saw
why do I own Carvana? Why do I not own this stuff?
Right, own this.
Like I've been here telling people like for like 4 months now to buy this stock. Maybe longer. It might be like 6 months I've been just like telling people to buy. Yeah, it looks good. Buy it. Please buy it. That's like did I buy it? No.
Dude, 50% ago I asked you, okay, so what is this chart telling you? When should I enter? And you just said enter. Just enter.
I just laughed. Like the first time I saw this chart, I just laughed. I was like, "That's the most bullish chart I've ever seen." And yeah, it's up 50%.
Yeah,
in Stonkland, which is a nice 3-month return.
And it's no down. So like like the Sortino ratio in this is like unbeatable. You can just lever up and go hard.
Yeah, I am stupid. You're smart.
You are very good looking.
You are very good. Yeah.
Man,
it's a good reference. That doesn't date us at all.
Yeah, nice call.
Bitcoin. Where did we close the daily? Oh, we just missed it, huh? We just sniffed it, but we're above it now. All right.
Game on, baby.
Yeah, it'd be interesting to watch the Bitcoin daily tomorrow. Like if we close kind of deep up here, good sign. Not like, go mortgage your house, but like good. I think good sign.
I'm gonna wait for that fucking ICT break back into the zone and then long.
Okay, you do that.
It doesn't work like that every time.
No, it does not. But I want to leave everybody just with some words of wisdom from
Nice.
the great gigantic rebirth GCR.
Probably the GOAT trader, right? Like this guy is so good.
The GOAT, for those of you who do not know him, hasn't tweeted since last April. Likely my final tweet regarding crypto. As I always say, if you have long-term conviction in BTC and ETH, you will outperform just holding and not trading. They're only going to keep printing more money. You're unlikely to time every local move. ETH at 10K is one day programmed.
God, wisdom. That's pure wisdom. Fucking
And,
GCR.
I agree with pretty much all of that.
And here you are trading.
Well, I am a professional trader, so
Yeah.
got to do my job.
Right.
But I think what he's saying is correct for most everybody,
I agree.
like nearly everybody. And it's even what I do. Like I don't really go in and out of spot, right? Like, and my spot thing is different from my trading brain, right? Like I haven't sold any ETH in like 9 months. I don't know. It's been a long time. Maybe like a year. I don't know. Maybe like a year since I've actually sold any spot ETH. And like I don't really plan on selling any for a while unless I just see something really stupid happening. Because I think this tweet is accurate. I think just one of the most obvious trades in the world right now is just the long financial nihilism, long money printing.
Yep.
They're going to print the money. People are going to feel helpless and gamble with all the free liquidity. All of this stuff is going to get really, really stupid. I've said it before. Like I think the last bubble wasn't really like the whole bubble. That was the first leg. I think the grand finale is still to come. I think it could get really, really, really dumb. And it's like a little bit dystopian, but like we've been talking about this forever. It's just like if you don't position for this, like they are sort of destroying the money supply and destroying the economy and just basically praying that AI productivity bails us out.
Yeah.
Because otherwise, it's just like a math problem. There's just too much. There's just too much liquidity. They're inflating assets that people can't buy, and then they're getting forever locked out of them, and then they have to keep printing more money to throw at the poor so that they don't revolt in the streets, and then that cycle is just going to repeat over and over and over again until something breaks. And yeah, like you're kind of in a good position right now where you can still do something about it, I guess, and position yourself for that. But like I feel bad for a lot of people out there who I know who just don't invest or are not aware of this, and they just think they're just going to work forever and just like spend their paycheck and buy things, and it's just probably not going to be the case.
I'm with you. I'm with GCR. I'm long as fuck ETH and Bitcoin.
Max, what is the end game? Make more fiat as fiat gets less valuable? Well, you want to basically make money and continuously put it into real stuff, right? Like if I were to wake up tomorrow and be worth like $1 billion, I probably wouldn't be trading shit coins.
You would.
Maybe I would. I don't think I would. I think I'd be doing other things with my life as fun as it is for me. But I would own real things. Like I would not have I would own stocks. I would own real estate. I would own Bitcoin. I would own all these things. The reason I'm not overweight things, like the reason I don't own like the NASDAQ right now is just because I just think crypto is a faster horse. And I'm still in that phase of my life where I'm trying to like race the car up ahead of the whole like chase that's going on. Like I want to get like way out in front of everything, because you can't just like I don't know. I could just go all into real estate right now, I guess, and I'd be like okay, but like I don't think it's going to outpace all of the stupidity. It's more of like a wealth protection thing to me. And I
Right.
think you need like aggressive growth if you're like a young person right now.
Yeah,
I just think you do.
You're just in a growth phase, and then you make enough money, then you get into preservation phase, and I think that's it. But like to Max's point, I think you do want to make money now, of course, but then turn that into assets. Assets outperform.
Yeah, all this is like a means to an end. And I'll still own Ethereum, but like it like if I had $1 billion, like it would be like a smaller chunk of my net worth. Like I would rather own the corn. I would rather own stocks, solid stocks. I would rather own real estate.
But even ETH, like let's just say ETH is a faster racehorse. Like I do think there's a point of wealth that you achieve where you want to turn even your ETH into something more real, right? Like a more wealth preservation thing, because ETH can go down by 70%, which we just saw.
Yeah, it can. I think within crypto, you can just be like, look, everything I'm doing is to just buy more Bitcoin. And I know a lot of our ETH friends will not like that. And I'm a big ETH bull, and I think ETH will do very, very well. But like, there's a much higher percent chance that like if you go into a coma for 15 years that like ETH kind of fails and Bitcoin doesn't, because it's just doing it's just doing one thing, and it's just countering the thing that's happening in the real world with the money printing.
Bitcoin's already fully evolved to its final form. Like it's already where it wants to be. ETH's like still evolving.
Marty McFly, endgame, find a good woman and start a family. It's a good endgame, man. Wise words.
Damn, that is a good one. That's a good one.
You get yourself some land.
Yeah.
Get yourself some Bitcoin, some land out,
some kids, some
farm
dogs.
animals. Maybe field like a softball team.
Yeah.
Some dogs. And just just unplug from the chaos of the world. It's an appealing thing. It's something
dream.
I consider whether I want to do, for sure.
I think it's a great dream. I'm working on it, Marty. Working on it.
Love that for you, Marty. Hopefully that's what you're doing. All right. Anyway, that's enough philosophical chatter. Thank you guys for joining us. Again, like if you're not already subscribed, please come over to YouTube, subscribe to the Irresponsibly Long pod. And if you're not in the Discord, please join us in the Alfalfa Pod Discord. We are going to, actually we do have those links. Those are on alfalfapod.com.
Yeah.
Follow me on Twitter. Follow Eric on Twitter. I don't know if he tweets stuff, but I tweet things.
Yeah. Follow
Make
Steven.
you smarter, make you laugh, I think. Maybe not. Maybe I'm just delusional. Anyway, yeah, we'll be back here same time, same place next week. And yeah, keep an eye on the Discord too, because I'll drop those how-to guide on the farming. Sorry about the VPN, guys. I know that was like I know that was complete chaos for you guys to watch.
That was fine.
But yeah, hopefully everything's higher next week. Hopefully the dollar goes down, and we'll be dancing.
And if not, we'll be ready.
Yes, ready to buy
Yeah.
more. All right. Good night, everybody.
Later, everybody.